Good afternoon and welcome to everyone to this virtual conclave on boardroom dynamics inside and also beyond. We have today with us Suresh Prabhu ji, Honorable Member of Rajya Sabha. Sir, welcome. We also have with us past President CA Mukund Chitale, sir. Sir, welcome.
Good evening.
We have WIRC Chairman. Yes, sir. Thank you. CA Lalit Bajaj. We have our Regional Council Member CA Umesh Sharma and Regional Council Member CA Arpit Kabra. We welcome all of you to this program of WIRC and under that members, committee of members in industry and business. We will have eminent personalities over the course of the next 3 years, and we'll cover the whole topic of governance and corporate ethics and compliances and requirements. So I welcome all of you to this. And now, to start with, let me request Chairman WIRC for his opening remark. Lalit bhai, over to you.
Thank you, Murtuja bhai. Most studied minister and parliamentarian with in-depth knowledge on economy, CA Suresh Prabhu ji. Past President ICAI CA Mukund Chitale ji, who is director on some of the leading corporates and an authority on the subject. In absentia, past Chairman WIRC CA Shailesh Haribhakti, author, director on boards of various companies, inspiration for all of us. Dignitaries of the dais, members and friends. On behalf of WIRC, I welcome all of you in this August gathering for virtual conclave on boardroom dynamics inside and beyond. In these times of reforms and transparency, we in the role of independent directors and part of audit committee ensure that effective governance is in place. We have to deal with technological and psychological factors and with distinguished dignitaries for the day and the next 2 days. I believe we will have an enriching experience and will really help us to function more effectively. We will be delving on both the perspectives, responsibility and opportunity. I compliment Drishti Desai, CA Anand Bhatia and CA Shailesh Gedia ji for coordinating and ensuring and designing the program and bringing on board personalities with huge experience. Friends, at WIRC, we have come out with a case study on $5 trillion economy and we have submitted with ICAI Delhi office. And I am happy to share with all of you that our team WIRC with the help of some of the members are working on 2 case studies. One is critical analysis of MSME and second is ease of registration for foreign entities venturing in India, so that we chartered accountants can really help the business community in safely and smoothing out the various procedural aspects as far as running their businesses is concerned. We have taken one initiative at WIRC, which is mentorship assistance program to help the generation to take the profession ahead and successfully build their practice and business, and at the same time to move into ethical practice. We have started this mentorship assistance program, and I am looking forward for the audience today to come ahead and accept to be a mentor, so that you can really be part in this initiative in helping our younger members to grow in their practice. With this, I once again welcome all of you in this August gathering. Suresh Prabhuji, you have been kind enough, and we are fortunate that today you are with us to share your words of wisdom. We are really fortunate that we have you with us in today's gathering. Thank you, sir. With this, I request Murtuja bhai to take the proceedings ahead.
Unmute Murtuja bhai. Unmute yourself.
Yes.
Murtuza bhai.
Thank you, Chairman, for your updates and opening remark. We are all eager to listen to our own member, CS Suresh Prabhuji. And I know for so many years, when I was a convener of Kalyan CP Study Circle, Suresh sir used to come on and give budget speech year after year at Birla College. And every year, whatever number of chairs we used to pay, they will fall short, and we would have to add additional seats because number of people will go on increasing. So, sir, people are eagerly waiting to listen to you, and I would now request Regional Council Member CA Umesh Sharma ji to introduce CA Suresh Prabhu ji formally. Umesh bhai, over to you.
Yes, thank you. Today I have a onerous task of introducing Suresh Prabhu sir. अभी सुरेश प्रभु ये जो दो नाम है, इस नाम की महिमा ही बहुत अलग है. सुरेश मीन्स रूलर ऑफ गॉड और प्रभु इज गॉड. एंड हु इज द रूलर ऑफ गॉड्स, हु रूल्स द 5 एलिमेंट्स. और सर के बायोडाटा जो 15 पन्ने का है उसको मैं एनालाइज करता हूं, तो देन इट्स रियली वर्थ टू से that sir has ruled over 5 elements which are present in the different union ministry. Sir is present Prime Minister Sherpa at G7 and G20, and how 5
Umesh ji, are you there?
and then Union Minister of Chemical that represent metal, and Union Minister of Environment and Forest that represent metal. So this such a great personality, a chartered accountant who is of 11, who has secured 11th rank, and who is one of the fatherly figure to all of us. Let's welcome CA Suresh Prabhu ji, Rajya Sabha member, with round of applause. Welcome to you, sir.
Should I speak?
Yes, sir.
Okay.
over to you.
Thank you. Thank you, my dear friends. I cannot say my young friends because I have Mukund Chitale sitting with free. So Mukund Chitale, I cannot say he's young because he is my age. And I cannot call myself young, so I cannot call him young either. But I'm very happy that we have such a veteran like my dear friend Mukund Chitale as well as Shailesh Haribhakti will be addressing you on this very important issue in the next few minutes. So let me congratulate my friend Lalit Bajaj, my friend Murtaza, Umesh Sharma, Arpit Kabra, all of them for organizing this program. And it is organized by WIRC, right? This is organized by WIRC. So I am also not only a member of the institute, but I am also from WIRC. So it's my duty to be part of this program and talk about it. You just mentioned, the chairman just mentioned that you're working on a very important issue as a part of your, I can call it as a part of public spirited duty to prepare a $5 trillion economy roadmap. As a commerce industry minister, I had actually clearly laid down, and in fact, if I remember, in Mumbai, I had spoken about this $5 trillion economy to our members, which was an international conference which took place in NCPA, if I can recall. One way to look at it, to be $5 trillion economy, I've done sector analysis, I've done what could be the policy initiative, everything has been done. But one important aspect of that, can we have $5 trillion economy if we don't have large corporate entities in India? United States has now companies which are more than $1 trillion market caps. The US economy is the largest economy, because they are large corporate entities in technology, in retail, and other spheres. So for us to be achieving first 5 trillion, later on 10 trillion, when we double the economy, we need to have strong corporate entities in India. We cannot be large economy without large companies. There is a relationship between economic output growth and large companies. Also, large companies support significantly the growth of small and medium enterprises. Because large companies will rely upon the strength, the abilities of small and medium enterprises, which help large companies to grow even bigger. For example, because you are all from WIRC, there was a time when, that time the company name was Telco. Mukund will remember Telco. You, all my young friends will not remember Telco because now we call Tata Motors. But when there was a Telco and then there was a Bajaj Auto, it caused a huge exponential growth into SMEs in that area. Because there was Telco, there was small and medium enterprises. Because there was Bajaj Auto, there was a small enterprise. In fact, Bajaj Auto, when they started a plant in Vaduz, in Aurangabad, that caused a huge growth of small and medium enterprises. So we need companies, large and small both, which in turn will help economy to grow faster and bigger. That being the case, without companies, economy will not grow. Without economic growth, country will not progress. So ultimately, growth of economy and growth of country will depend to great extent on corporate entities, small and big both. If we need corporate entities, then the corporate entities growth will depend on what? We agreed that corporate entities are needed for growth. We agree that corporate entities are needed for economy as well as social growth. But what will cause the growth of corporate entities? What is that will drive the companies to grow? If you look at it, and one can study the growth of most of the well-run and long-run companies in the world, we'll find there is one thing that is common in them, and that is their strong boards. Strong not in terms of power, but in ability to think and drive the growth of those companies. There may be multinational companies, maybe be working locally or nationally, but one thing is common in those successful companies of the world is that they have very efficient and strong boards. Now the boards consist of directors, obviously, supported by full-time executives and others. But that is the place, the boardroom is a place where the board is located, is a now center for growth of countries and economies because they cause growth of the company and company in turn cause the growth of the economy. Now the question comes is, how do you make those boards more effective? Like those companies who are successful, we can learn from them as well as draw some independent lessons. One, the board is not just a physical room. You can call it dynamics of boardroom. That's today's program. The boardroom is not, you can make it very sophisticated, high-tech, state-of-art technology, all gadgets, fantastic furniture. Will that make a board, a very good board, because boardroom, the dynamic that you're discussing today, is not the one. The decor, the interiors, the amount of money that is spent on boardroom renovation is not the one which will decide its effectiveness. That will be only place where people meet. But who meets there is important. And they are the board of directors, the members. So the quality of board members is going to decide the success of the boardroom. Success of boardroom is going to decide success of company, and success of company is going to decide the success of a country and economy and society. So now you can imagine the relationship between $5 trillion economy, $10 trillion economy, and the boardrooms. So the boardroom and the board members, firstly, they must be qualified. They must be people of integrity. They must be the people of vision. They must have the ability to question the papers that come before them, scrutinize them properly. Nowadays, the papers may not come because it's all online. You can look at it, but information that comes to you, you must have the ability to decipher it and take corrective action on it. One of the important lessons one can learn is that to the extent to which board can exercise control over the full-time management of the company, that will in a way work as checks and balance for sure, but more importantly can drive the growth of that organization. The full-time employees, the executives, the CEOs, the CFOs, CTOs, all of them. The problem with them is they are very competent. That's why they're running the company. But sometimes it's possible that they may lack the vision because they are so much focused on day-to-day functioning that they may lose the sight of what is happening overall. As we call it, the bird's eye view, which is necessary to understand the global trends, the national trends, how it is changing, how the environment is changing. They may not understand necessarily because they are so much focused on the day-to-day management. So one of the principal job of the board member would be to exercise control on the management, but also provide that necessary overall input to the management. And to do that, if the board member doesn't have it, how will you provide it? So you must select the members in such a way who could have that ability and who must have that capability to provide that necessary overall input of the company. Now we have seen large companies, very successful companies, excellent pedigree, excellent past record, have failed because they didn't change. They changed with changing times. And some very small companies came out from nowhere and now become market leaders only because they could understand the changes very effectively. Elon Musk is an example. He is now sharing the honor of being the second richest person in the world with the founder of Microsoft. When Microsoft was founded and its founder became the richest man, there are hundreds of companies waiting before him. They could not share that honor. So what happened? Microsoft became the market leader, the founder became the richest person. Now, of course, that honor is with the founder of Amazon. That's a different matter. But he could not, the person who came from behind in no time has become the second richest man in the world. In what time? In virtually no time. What does it mean? That General Electric, which was formed maybe few 150 or more than definitely 100 years old, more than that, could not get that honor of being the most valued company in the US at a time when Microsoft, Bill Gates was forming his company. Then came from nowhere suddenly a company like Amazon, not from the forest, but from the Wall Street, and became rich. And now Elon Musk has become that. That proves a point that companies who only live in the past will never succeed in future. Those who have good past and good vision of the future, they will succeed. So who will provide that vision? It's a responsibility of this board of directors. The boardroom must be the place where there is an interplay between day-to-day management and the outside board members. They together must come out with a vision for the company to succeed in future. Because no investor invests in a company because of the past. Shareholders buy stock of a company because of future. The future is decided in the boardroom. So the boardroom, the ability of these people must understand. I'm not getting into the day-to-day governance, corporate governance, compliance. All the issues are very important. And I'm sure there are laws, enough laws to make that happen. The boardroom dynamics, what is the role of independent directors, what is the role of full-time directors, what is the role of board as a whole, how they must ensure the interest of the shareholders, how much they must do with the compliance, how much they must make sure about all of the important issues. But in my opinion, the most important issue for the success of a company will come from vision and the direction. And that must come only and only at board of directors level. Now the question that will come is, how do you get that vision into the company? Obviously, it must come from somewhere. So the board members must possess that ability. The visionary leadership only takes company to a newer heights. Therefore, you must have those capable persons inducted into the board. Again, the vision must be translated into action. See, vision cannot work in isolation. Vision is not an abstract concept. Vision can be translated into action, then only it has a meaning. I may have a fantastic medicine, fantastic, can cure all illness of the world. That's the medicine I have. It's in a bottle, but I cannot administer it. What is the use of that medicine? I can claim that this medicine can cure everybody. Fantastic. But I cannot take it out of the bottle and administer on patient. What is the use of that medicine? So vision is like that medicine. Cannot be put inside the bottle. Must be administered into the organization. So another ability of the director, the board as an institution, board of directors consisting of individual directors, must be ability to inculcate that vision into the organization. Must convert that vision into corporate plans. Must have the boardroom to drawing room ability to put it into reality. From drawing room to shop floor, drawing room to marketplace, they must have that ability. So the board of directors cannot function looking at checklist. Whether there is a quarterly report on labor law compliance, whether there is a quarterly report on tax law compliance, whether the quarterly report given on ensuring that investors' protection is properly taken, this is fine. These are the bare minimum things have to be done anyway. But you cannot make companies run only on compliance alone. Compliance is necessary, that is a basic requisite. But successful companies cannot just take comfort in saying, I'm a fully compliant company. You must think something beyond it. And that is where the success of the organization comes in. You mean to say that Google or now Tesla, all these companies, they must be definitely be compliant with all the security exchange compliance laws. They will be compliant with IRS, that's the Internal Revenue Service of the US. They must be doing all that. But could they have become the darling of the investor? They could have acquired market share only on that. So So you must have that ability to vision and convert that vision into reality and then constantly monitor. Another thing about successful companies would be reinventing. You must be able to reinvent yourself. You cannot be staying in one corner of the world by saying, I have done enough now. So unless you want to retire and become a saint, then it's fine. You have done enough now. You can change your what your chairman is wearing, the jacket and all that, Lalit, and discard it, wear orange robes and go into Himalayas. That's a different thing. But if you don't want to do that, then you must be able to reinvent all the time. Not retire, but get into new. So that is another role of a board of the director of the company. Constantly change with changing times. I can go on and on, but I know there are some very prominent friends of mine whom I can only meet nowadays virtually and not in reality. So Mukund, of course, I'm seeing after many, many years. So I don't know whether he still lives in Parle or not, but I live in Khar and he's Parle, so there's not much difference. But we don't meet each other. Shailesh, another good friend of mine. In fact, his father, Vishnu V.V. Haribhakti, was also my good friend, or he's a good friend. And Shailesh is also my friend. And now Shailesh, his kids, I don't know them that well. They're also running the practice. So all of them are my good friends, so I don't want to take more time. I would like to only request you that, very happy that you keep inviting me so that I can learn something. I don't know whether institute gives me credit for speaking. Like them credit you have to give, for qualifying to be there. So I don't know you get either credit or not. But certainly, if not credit, being present here will not mark my debit. So that's a good thing. So there's a negatively good. So I'm not getting positive thing, but at least getting it. So thank you very much, Umesh Sharma ji. Thank you for taking the pain of doing that for me, as well as Kavra ji. So I stop here, but I can say this is a very important program you organize, in which boardrooms, how they will play the key role. And that's why I was trying to explain on one side the role between boardrooms and growth of economy, because you mentioned, Lalit ji mentioned about 5 trillion. So I just said, again, very important issues of compliance, everything we have to do it. And Mukund is the best person. One good thing is, between Mukund Chitale and Shailesh Haribhakti, if you take them out, then I think no board can be complete of any company of the world, because they represent in the top companies of the world. They are in India. They are Mukund Chitale or Shailesh Haribhakti are on the board of those companies. Therefore, they can share their best possible explanation and knowledge with all of you. So let me not stop you from listening to such good advice and good experiences. I'll stop here. Thank you very much for inviting me. We'll be in touch and we'll work together. Thank you very much.
Thank you, sir. On behalf of WIRC, we are extremely grateful that you accepted our invitation and you joined us today. Sir, I just request CEO Umesh Sharma for a formal vote of thanks for the session. Umesh, over to you.
Yes, after listening to Suresh Prabhu sir, we are on the path where we know that ICAI supports our members. Our members will do their roles and responsibilities for the growth of the board. That board will lead to the growth of corporates, and that corporate world will lead to the growth of India. So, sir, you have given a vision to all our members that how a member can grow and become board member, or how he should manage the corporate world. And your vision, your words of wisdoms are always torch bearing to us. So thanks, sir, for giving your time, for your precious words. And with these words, I thanks to all the participants also. And now I wish and give the mic to Murtuza sir. Thanks to Lalit Bhai. Thanks to Chitale sir for this inaugural session. Thanks, Prabhu sir.
Thank you, Umesh.
Thank you very
Over
much.
to you, Murtuza.
Thank
Yes.
you.
Thank you. All the best. Thank you. All the best.
Thank you. Thank you.
So, sir, with that, we directly move into the first technical session. And
Murtuza, we should definitely share the credit, CP credit to Suresh Prabhu sir also for this. I think he is ensured.
yes, sir. So definitely, sir, for all the attendance, the CP will be marked against your membership number. So for all the benefit of all the participants, I think let us get into the first technical session. And on behalf of WIRC, I really apologize to all the partnership to the participants that we started a little late because of some technical glitches. But I think we'll try to cover that, and we'll even cover up 10 more extra minutes if there's a need. And Chitale sir, the questions have started coming already in through mails and through chat also. So towards the end, we'll raise all the questions to you. But let us first listen to you. And so with that, we get into the first technical subject, that is effective governance to the board framework, guidepost to effective governance to board framework. And I request my friend and colleague, CA Arpit Kabra, to introduce today's speaker, Honorable Past President CA Mukund Chitale. Arpit, over to you.
I think enough has been said, and legendary personality that we have with us, our past President Chitale sir. He's someone who doesn't need any introduction, but it's a privilege, it's an opportunity. Thank you for giving me this opportunity to introduce him. And after hearing Suresh Prabhu sir, two people today to start off a session like this, I think we have the best team to get on with the directors and board dynamics. So Mukund Chitale ji, the managing partner of Mukund and Chitale and Company. He's been more than 40 years of experience on advising companies on their business, financial, and strategic matters. He's acknowledged as an expert in accounting and auditing matters in India, perhaps also an authority on any of these issues. He's been the chairman of the NACAS, constituted by the Government of India. NACAS has been the country's highest standard-setting body, which recommends new modification in accounting standards to the government. Mr. Chitale was the president in 97-98. Central Council member. He was also the chairman of this August Council in 84-85. He was the member of the International Auditing Practices Committee of the International Federation of Accountants, IFAC, during 98 to June 2000. He is the chairman of the Standing Committee on Accounting Issues, constituted by the Insurance Regulatory Development Authority of India, IRDA, and member of the Primary Market Advisory Committees, constituted by the SEBI. He is also director, as mentioned by Prabhu sir. Biggest of the companies that you found, and you'll find two names common who are our speakers in the first session. So Mukund Chitale and Shailesh Haribhakti are both. So with this small introduction, I have this privilege, and I welcome Mukund sir to this fantastic and thought-provoking session on board dynamics. I request all of you to please join hands and welcome Mukund sir. And without further ado, request you sir to please carry on with your session, sir.
Yeah. Good evening. And thanks to WIRC. I think this was a good opportunity for me to listen to Mr. Suresh Prabhu after a long time. As he rightly mentioned, we have known each other for a longer time, but listening to him is a great pleasure. First, technical session. Normally we use the word technical so that the speaker knows what he's going to speak about. First point. Secondly, generally the organizers do their risk management when they ask the speaker to give a presentation. But somehow, having gone through this process, I also know my things, and generally I don't have a presentation. So I think the risk is more on the organizer side because they don't know what I'm going to speak about. I think that's the starting point for today's session. Prabhu Sahib rightly pointed out what are the things which make a company grow. A growth of a company would achieve the national growth, and the national growth would achieve a sense of satisfaction and belonging to all of us. I think that's what he rightly led the perspective in which one is to look at the subject. In a program like this, when one doesn't see the faces of the people who are going to listen or who are listening, especially for a teacher like me, it is very difficult to speak about, because one is always used to talk when you can see into the eyes of the people who are listening and know whether they are actually listening or they want to take something else more seriously. But I'm sure you are all listening with the best of your abilities and will take the advantage of whatever you listen. The more assurance is that there is no information which I'll share with you, because I think information is always available on the net and there is nothing which I can add on to that. So how do we look at the subject? I think let's talk about 2 or 3 things broadly. Why corporate governance, how corporate governance, and whatever we have talked about, and who will do it. I think broadly these are the 3 questions which I'll try to look at from my own angle. So why is very, very important, and I think Mr. Suresh Prabhu rightly mentioned that in the beginning to a great extent. And while he was talking, I was only remembered of a famous saying by one of the management guru called Peter Drucker, who has mentioned, a business grows only to the extent that top management allows it to grow. The bottleneck, after all, is at the neck of the bottle. I think a well said statement which runs across all the generations. But if you look at the statement, I would say the statement applies not only to the businesses and to the companies, but to all of us. For a moment, let me spend time on all of us who are spending time either as speakers or as listeners or as organizers. I think the statement makes very clear that the top management has to decide that they want to grow. If they decide, they have the vision, they have the action, then they can grow. I think that's what Mr. Prabhu mentioned to us. And the bottleneck is at the neck of the bottle. So all of us who run either your own offices or who are working in some organizations, we should better remember that this is one sentence which tells us in nutshell where the clinch lies or where the shoe pinches. So I think why corporate governance? The answer is very simple. Most of us are investors into various companies. Whatever little money we get, we invest into the shares of companies, and we expect that the value of the share would go up. We also expect some returns on that, and such valuation and such returns would come only from such companies which are well run. So I think that's a sure shot first point advantage, that we want the companies to grow because we want our investments to grow in a nice fashion. It's also an investor protection. That means if there are good boards which are taking care of the company's growth properly, it's a good investor protection. And the most important is, with the size of the business that we are today, the ownership and the management are completely devoid of each other. Meaning thereby that the shareholders are many and the management is in the hands of those running the board or who are managing the board and those who are executive directors. Now, since the owners and the management are separate, the management, in a way headed by the board, have to take the full responsibility and ensure that they give the results to the shareholders. I think that broadly explains why corporate governance and why, in fact, good governance. In fact, many times when we use the word corporate governance, I feel we should use the word good governance, because it's not just the corporates who are expected to be doing the governance properly. All of us, in whichever areas we are working, are supposed to be doing the governance properly. So I think let's call it as a good governance. Now, all of us who learn economics at some point of time know that the factors of production are main, machine, and money. In the current situation, we find that those who have the energy, the vision, and the wherewithals can get the money and the materials and the machines properly. What you need is a good people. And I think a good people is something which is very, very scarce commodity. And these good people are expected to constitute the board. And I think that is where we go to the board framework. As the first subject has been put, how do we look at it? When you look at it, the board of any company, I've been on the board member, been a board member for a few companies in the last few years. And the experience is that if you look at the corporates in the country, and I think I'll by and large try and talk about the companies in India rather than companies outside India. If you look at the companies in India, and if you look at the board constitution, broadly you can look at the boards as those who are executive committee members or executive board members, and the remaining can be called non-executive broadly. And those non-executives are either nominee directors or independent directors. Legally, there are definitions given to this, so we are not going into that. Now, these boards collectively have the responsibility to run the company. They have their legal responsibility. And as Mr. Prabhu mentioned, compliance is just one thing which is bare minimum. So merely looking at compliance by itself is not going to be enough. And that is where we have to look at the styles of management of these companies. Now, broadly, how will you analyze those companies? I try to analyze them in this fashion. There are many companies which are promoter-driven companies. That means there would be either a family or a few members who are driving the growth of the company. And there are a few companies which have no promoters, but the so-called professionally run company. Now, sometimes I wonder, these are not two mutual exclusive words. It doesn't mean that the promoter-driven companies are not professionally driven. It only means that the promoters are identified and they have a strong interest in the company, and those are also professionally run companies. And there are other companies which have no identified promoters. But in India, we have got a third category called public sector companies. And very broadly, if you look at the banking sector, the insurance sector, you can find some large corporates which are also in the business of banking and insurance, and few other large corporates in other areas. Those are public sector companies. Now, when you look at these boards, how do you analyze them and how do you identify them clearly, and how do you decide to invest in those companies? I think these are the points that we will try to look at. And that is from the viewpoint of all of us, as either those who are sitting as board members or those who would be board members, and naturally all of us who are investors into these companies. Now, some of these boards are driven by chairmen who are very, very strong chairmen, and the experience is normally somewhere there. He is to drive the entire board very direction oriented in a very strong fashion. Now, when I use the word strong, it doesn't mean strong in terms of wording. It means strong in terms of action and in direction. Now, in the board meetings, when the meetings take place, there are different ways in which the meetings do exchange ideas with each other. There are some chairmen of the board who encourage people to speak, who would encourage new ideas to come up. And I think those of you who have been sitting on the boards would realize this very quickly. I won't take names of companies, but there are companies where they would have huge presentations and would allow very little time for discussion. And there are companies which would make a minimal presentation, but would allow a large time for discussion. I think the second category is a preferred category, because when board members are coming to the board, they expect that their knowledge and their experience should be contributed for the common growth of the activities that you are talking about. Talking about the board, there are different ways in which I have seen the boards functioning. There are some boards where I have seen the next level of management is also present throughout the board meeting. Now, some people don't like it, some people like it. So in one of the board meetings, I asked the chairman that what is it that makes you believe that the next level of management also should be present in the board meeting? And I think his answer was very, very good and very revealing. He said most of the times when the people talk in the board meeting, they talk in an advisory capacity. They say this should be done or that should be done. Or sometimes they say what is not done. And that is the point when the chairman used to ask a particular manager heading that particular department to respond to the suggestions given by the board member. Now that used to encourage a good amount of debate between the suggestion and the practical implementation of it, or the necessity of implementing it. Naturally, that made the board a strong board, because also when the board members realized that the people about whom you are speaking or the functions about you are speaking, the person in charge is physically present there and he can answer the points that you have made, or if you are making a criticism, he can respond to that criticism. So personally, I found such board where a next level of management is encouraged to attend and allowed to speak and participate, does develop into a strong bond between the top level of management called the board and the next level of management, which are really the operating people. But this is something which is not done in many boards. I think there are very few boards who encourage this practice, but I have found that this is a good practice and it does help in the long run for the growth of that organization. If you look at the way in which the functioning within the board happens, as I mentioned, that some chairman would encourage different views and presentations. Now, when we say board members, there are different individuals who are coming in as board members. Now, this program being a program of chartered accountants, I believe that most of us who are attending the program would be chartered accountants. And typically in the present circumstances in India, the function in finance, accounts, audit, a CA is considered to be a very natural choice to be a board member looking into that area, and normally suited best to be the chairman of audit committee. So one function gets established. Normally there'll be a lawyer who will represent the legal side. There might be somebody who is in the IT sector. There can be somebody who is in the marketing, and different functionalities get represented on the board. Now, when such different people are coming on the board, how does it function? It really functions through the committees. And therefore, I think what is required is a strong workforce in the committee. And one of the committee in which naturally all of us get involved more is the audit committee. Now, in the course of next 3 days that you're going to talk on the subject, there are going to be different sessions on the committees and their functioning. Therefore, I won't spend time on what it would be, but let me at least try and look at the softer aspects of the board members as to what are the characteristics that a human being should possess to be a good, effective, and participating board member. First is to understand as to why you are there. You are there because you are either identified to be a person specialized in an area, and somebody either recommended your name or somebody felt that you are a good person and therefore you are there. But generally a company would keep a person as a board member as long as you are rendering good service to the company and the company gets good value out of your contribution. I think it's a very practical world, and therefore you would continue to be on the company as a board member as long as your contribution is good and productive for the functioning of the board per se. Now, what is the first quality which is required? I think the first quality is to ask question about something which, if it is being discussed and you do not know about it. Sometimes while a subject is being discussed, many of us feel shy of asking such questions. And I think if we don't ask questions and the topic is discussed and concluded, subsequently one cannot say that I did not know the subject. And therefore, I think the most important thing is for us to understand how to ask the right questions. It is normally stated that there are many people who ask questions, but the intelligent people normally ask deceptively simple questions. I think over a period of time, if you develop that ability of asking a simple right question, a lot of things come out of the discussions. In some of the boards where I sit, we have some stalwarts in the audit committee, and since I'm talking amongst the group of chartered accountants, in one of the committee meetings I was asked a question which I can share with all of you, where I was the audit committee chairman, and I was asked a question that, look, the auditors are coming and saying that we have relied upon this, we have done this, we have taken the representation. Now with all this, then what are the auditors doing over here? A very simple question, but if you as a board member and as a chairman of audit committee know exactly the concepts of management, concepts of accounting principles, concepts of auditing standards, then you can answer the point rightly. If you are not understood those concepts rightly, then answering such question becomes very, very difficult. So I think the point that I'm trying to make is one must develop a skill of asking the right simple questions as much as possible. The next ability is normally ability to listen. I think that's a very necessary ability to listen and make your comments at the end of listening. Now, about 20 years ago, the mobiles were not as common as today, but today mobiles being what they are, one major hindrance for any good listening is always the mobile. If you are sitting in a board committee meeting or even in the program like this, you can easily watch out how many people carry mobiles in their hands and how many people would have mobiles in their pockets which are kept on silence. So typically, I think in a board meeting, keeping mobile away is like the first prerequisite, I would say, if one has to give a strong attention to the subject that is being discussed. One more quality which is necessary is that many times you as a board member must be having a very strong point and you wish to make the point. But it is better not to be a solitary soldier on a given position or on a given point. Say in the course of discussions on various items, if it is noticed that there are different points of view which are coming and there is a good point which you want to make, it is possible that if you get one more person to support your point of view, the point gets accepted very easily. But if only you keep on talking, it is quite likely that a majority the point might get just struck away. So the ability to encourage some other board member also to pick up the point that you are making is always a good ability which is necessary when we sit as a board member. There are occasions when one comes across views which are completely contrary to your own understanding and you want to make your comment. I think one must remember that one has to be as polite as possible within the discussions. And of course, this I'm not saying only for the board, it is necessary at all levels. And one can be completely polite, but one can be completely firm about what you are talking about. Clarity does not mean it has to come from arrogance. I think the clarity comes when you are very clear on the subject that you are talking about, and those points can be made into communications very, very simply. There were occasions in some companies where one of my board member was sitting on the board and he explained this to me in a very nice fashion. The company wanted, and since we are talking on accountants and auditors, the friend of mine was the chairman of an audit committee and he narrated me the following. The company had a huge expenditure on some development projects, and considering the quarterly results, the company wanted those expenditure to be capitalized and taken forward, and it was a big amount. Somehow the chairman was very clear that if such an amount gets into the profit and loss account, the profit might turn into loss or the profit might go down substantially, and therefore more or less the director of finance and the chairman had felt it necessary that the item should be capitalized. When the major item was discussed with the chairman of audit committee, who was a friend of mine, he looked at the item and he felt that this is one item which is in the nature of revenue, and therefore in spite of their desire, he explained to the chairman that look, the nature of item is such that it should not go as a capital expenditure. Now that gave a shock to the chairman, because that would have meant the quarterly results would have gone out in a completely different fashion, and the director, finance and the chairman tried to argue with the audit committee chairman as to why this cannot be done. There are X number of companies and Y number of companies who are doing it. The chairman of audit committee was a friend of mine, tried to communicate to him saying that look, it is not good for a company like ours to do this, because if we do this, the auditors would qualify the report. The chairman naturally put a question, so what? If the auditors qualify, let them qualify. Now that is where the good governance and the corporate governance principles come in. And this friend of mine who was the chairman explained to the chairman that look, for a company, if the audit report is qualified on this account, it means the shareholders would not appreciate this kind of an accounting treatment, and therefore it is not good for the organization to do what we wish to do. When the chairman heard this, I think great credit to the chairman that he stated, okay, our company will not do it. I think that kind of a skill is what is expected to be taken up by a person who is sitting on the board. That means be clear on your concept about what you are doing, but be clear in communicating without arrogance as to what is good for the organization, whether our organization should do it. I think these are the kind of goalposts that we must develop for what is called as good corporate governance. There are many things which will be written in the books. There are many things which are written in the books on laws, etc. But while you deal with each other, how do you convince the other person that what we are doing, if it is good for the organization, we should do it. If it is not good for the organization, we should not do it. I think that kind of a skill is absolutely necessary for that company. Few other points which come up in the course of sitting on the board is a common topic of related party transactions. Many companies have this topic which is very common, and there are many companies which are related to each other. Now, when such related party transactions are there, of course, the law very specifically says the manner in which it should be done, how it should be recorded, etc., etc. I think a good goalpost is, can we ask a question whether such a related party transaction is necessary for the company? Can the company work without these related party transactions? I think when you ask a basic question like this, a lot of thought process starts within the company, and over a period of time, the company is able to develop whether it is useful for the companies to keep on having these related party transactions, or we should move away from such related party transactions. On record, there are many companies which will have some outside firms coming into and checking your transactions, policies being done, etc., etc. I think the basic question is that transaction useful to the organization in which you are sitting as a board member? Is such transaction necessary for the company in which you are sitting as a board member? If the answer is yes, I think it's a good point to continue with such related party. Otherwise, can you encourage your company over a period of time to move away from such related party transaction? I think that is the direction to which a company should be pushed to move. Otherwise, this is found to be one such area which is generally bringing down the reputation or the values of a company. Another common point which has been found is the transactions through subsidiaries. I think I won't take the names of any company, but there has been a companies where the subsidiary which was not audited and it was subsequently audited and it brought profit into loss, etc. Therefore, whenever transactions are happening through company, I think as far as the board positions are concerned, how do we really monitor the performance of various subsidiary companies that are working under your company becomes very relevant. Because it is one company in which you are sitting as a director, but if such a company has got a large number of subsidiaries and some of them also happen to be listed, some of them happen to be unlisted, or all of them are unlisted, how do you ensure that the governance principles in those subsidiaries are also equally good as much as the company in which you are sitting? And I think that is where administration of this corporate, the governance principle that we talk about, becomes very relevant. And I think, therefore, that is what brings us to the next point. How are the agendas set up in the board meeting, and how do we tackle those agendas? The normal agendas which are set for the board meetings are, of course, the quarterly accounts, the quarterly audit, the presentation by auditors, and all those things will be normal. Then there will be also expected to be at least once in a year, one should have a presentation on human resource policy. If your company is engaging a large workforce, there should be a presentation on the risk management, and it is useful to have at least one meeting a year which is called a strategy meeting in addition to the budget meeting. Now, there are companies which convert budget meeting into strategy meeting. I think that will depend upon the size, the nature, and the activities of the company. But it is useful to have a review of all the operations of your company during the course of the year. One is through the budget, and secondly, to look at the past and then look at the future and see what will be the style of the operations, what will be the strategy of the company for the next. And I think that is something which becomes very essential. In the board meeting, if you are sitting as a board member, one must very clearly find out which are the issues which are come for noting and which are the issues which come up for approval. This appears to be too technical, but I think this is something which takes away the, in fact, the entire workload of the board. There are certain items which are clearly for approval. Then the items must be circulated in advance to the board. They need to be discussed properly and they need to be decided in an appropriate manner. There are certain items which come up to the board for noting. Now, these are always items which one must be very careful about, because what is called noting, it very clearly means that within the company in which you are sitting as a board, whether you have the operating policies clearly laid down, whether authorities have been given to the subsequent level of management, and whether it was necessary for that management to put up those items to you for approval or for noting. Of course, in very small companies, sometimes these policies may not be in written document, but I think large corporates would have these documented very properly. So one has to be very careful about items which come to you for noting, because if the next level of management had the authority to decide something, and if it is not necessary for that management to put it up to the board for noting, avoid such items being taken to the board level. Very clearly, when you just note an item, you are also accepting the responsibility of that item. And therefore, one has to be very careful in terms of noting items. All of us being human beings, I think items, to put it on the very lighter side, items which come up for few minutes prior to lunchtime, or items which come up for few minutes prior to closing time, are generally the most slippery ones. I think some of you who would have shared the positions of chairman of companies, etc., know the tricks that you would adopt to push an item just prior to the lunchtime or just prior to the closing time. I think these are the items which need to be very carefully handled, because in the speed that you achieve for discussions, you might be pushing an item which is requiring more careful attention. And I think that is what I would say is very relevant. Another area for good board is to ensure that all of us get training in various aspects of the business of the company. I think all of us, at least in today's program, I would say people who are chartered accountants would know the accounting, etc., properly. But it doesn't mean that we would know the business of the company properly. And therefore, initially, when we join a board, induction program is necessary. Over a period of time, I think management techniques and various other aspects of business, we do need training. The only point I would make for being an accountant is sometimes we tend to spend too much time on accounting if we are chartered accountants. I think that is something which we need to be careful about. Because we know the subject, it doesn't mean that you are going to become an accountant of that company. Even if you are the audit committee chairman, you are not the auditor of that company. You are not writing the management accounts of that company. You are above that level. So I think those of us who are in the position of knowing the subject, in fact, have to take this care more properly. Without offending anybody, I've seen some of my friends who are on the boards of various banks. They try and visit the branches of the bank to understand the business, etc. I think this is an area which one has to be very careful about. There is a distinction between knowing a business, understanding a business, and working there as a director of a company. And I think as a director, one must therefore be very careful that you don't run into the position of actually doing an activity where you are only in the position of a director and you are not expected to function on an operating level basis. I think this is an area in which at least I found some of my friends very in a difficult position, because they get involved too much into the accounting and auditing aspect. I think that temptation one will have to be avoiding very, very clearly. The next area that comes to the mind is items which come up to the board, whether those were already seen by some committee or they are coming to the board directly. I think items which come through some committee, one must give credit to the committee and allow the chairman to make a presentation properly. And thereafter, if you feel that there is some aspect of the business which is not covered by that committee, then you can make a mention. But if there's an item which has come directly to the board, then I think such items need to be tackled differently. There's one more area which is necessary, and that's the evaluation of board. Naturally, SEBI has laid down the rules about what evaluation should be done, and there are different companies which do the evaluation at different levels. But this is one area which I have found to be in practice not very, very scientifically done in few companies. Of course, this is a very delicate subject. If you're sitting in the board where there are hardly 5 or 6 members, to do the evaluation in a very formal manner becomes extremely difficult. But I think over a period of time, we'll have to learn to deal with this subject about evaluation. Because as I said in the beginning, one would be allowed to continue on the board only as long as the company is getting an effective value of your being on the board. Otherwise, companies would not retain you on the board for a longer period. Another subject which has become very relevant is the whistleblower policy. I think last few years, if you look at the ways in which the problems within the companies have come out, at least in some of them, the originator, I would say, was a whistleblower. Now, that's the reality of life, and therefore, if you are sitting on the board, it is in your interest to look at the items which are coming through whistleblower mechanism. Some of them are with names, and some of them are even without names, called anonymous. But I think one must be very, very clear that any item which comes through whistleblower would be attended properly, because that does give you an indication of things which might be happening, or where somebody feels suffocated, or somebody feels that your company can take some better stand in respect of certain items. And I think therefore whistleblower policy is one area which I think needs to be attended to very, very properly. Another aspect which has come to the mind is, while sitting on the board beyond a point of time, one should learn to be either a mentor or a mentee. Now, this is on a personal front, I'm saying. That means as you grow senior, you start believing that you know everything. But I think that's not a reality. At least I keep on learning in all the boards that I'm sitting. There are always colleagues of yours, whether junior or senior, doesn't matter. But the approach that they bring out in the functioning, the approach that they bring out in the reasoning that they give, there's always a tremendous learning that you make in the process. And that is what I would call to be a mentee. That means there is something which I can learn from the way in which the other board member is presenting a point of view. The other board member is bringing out a new issue which you had not thought of. I think that brings in a lot of good learning for every one of us who sit on the board. At the same time, if you have some clarity and if you have some principles on which you are talking about something, you must be able to clearly communicate the reason as to why you are speaking something. And I think then you automatically become a mentor to somebody without knowing yourself. Many people have the habit of saying, this is my opinion. I think in today's world, when you sit on a board, the word opinion should be always couched with some logic or some reasoning to begin with. If it's a technical matter, then it has to be based on some law, reasoning, understanding, regulation, etc. Otherwise, except for great stalwarts in the country, I think opinions can be many, but what matters most is what's the logic on the basis of which you're giving the opinion, because I think that makes a difference to the person to whom you are saying this, the board in which you are talking about, and the topic on which you are dealing with the matter. So I think what we are trying to look at is the corporate governance principles which has evolved over a period of time. Now it's been a long journey for all of us in the country, and due to the laying down of, you can say, requirements, necessities by SEBI, the things have been moving in a different shape naturally. Theoretically, there are a lot of people who keep on saying the SEBI mandates a lot. The mutual fund business, practically everything is laid down by SEBI. But I think most of the laws and regulations are normally response to what is happening in and around the business situation. So I think we get what in turn the business is giving out in the country. So that is something which one has to accept. The point is, when you deal with the legal situation, one has to implement those laws as they are. If you have a different viewpoint, I think in programs and seminars, there is opportunity for us to explain what can be a different view. But when you sit in a board meeting, naturally one has to listen to, one has to follow, implement the law as it is. There one cannot be carrying on one own reasoning saying that I don't agree with this and therefore I am not going to talk about it. A lot is talk about independence. I think that's a good area to talk about. On a lighter side, I feel independence is like communism. It is very easy to explain, very difficult to implement. Now, does independence mean that you need to be different in all subjects? Does it mean that you would not agree on anything and everything with others? I think the idea is no. The idea is that on a given subject, do you have your own thinking, reasoning, logic, and are you able to explain it to those friends of yours or in the board meeting that you're sitting, that this is the reason that you are talking about like this. So I think when we say professionally qualified board, it does not only mean that you need to be a highly qualified person to be on the board. I think what is more important is you need to be a good human being. You must have a logic, you must have a reasoning, you must have the ability to communicate properly as to why you say something. Your degree beyond a point of time doesn't take you anywhere. I think that's taken for certain. But beyond that, what is required is a culture where you can work with others, a culture where you can slowly move on to accepting the other person's point of view and then work together in that direction. Now, as we work in the boards, I think there are different kinds of people that we meet. And as long as we keep the learning process on, that's always an enjoyable process. We learn a lot while sitting on the board. And when we say effective governance, I think in short, to put it very plainly, I would say what you would expect the other person to do to you, are you doing it to the other person? Because generally when we talk on subjects, and I would say limiting myself to India, there are 2 or 3 areas on which every one of us is very free to talk about. So I'm saying beyond corporate governance, one is politics and one is cricket. I think these are 2 subjects on which practically everybody has an opinion. Similarly, on governance also, anybody who is in commercial field has some views on governance. I think the only point I would make is, while we are absolutely free to have views on governance, a question that one should ask to oneself is, all that we are talking about others who should do what, am I doing what I'm expecting others to do? I think I'm doing what I'm expecting others to do. It's a great service to the corporates and the field where you're working. I can see Shailesh joining here. The next session is at 6:30. I would keep some time in between to have questions, if any. Now, to end with, I think on a program which is completely on VC, as I said initially, a speaker who has been used to speaking when the people are in front of you, the difficulties are more, because one doesn't know what way the listener is listening to it, what way the listener has accepted it. The only point I would make is, in subject of this nature, when you say governance, we expect a lot, and we generally, I would say, also explain, and we say a lot of things to be done. But taking only a personal kind of situation, I would say, I'll take the help of me to extend over here, and I think that is where I will end my talk. Normally, we should believe in what we are talking, and we should talk in what we are believing. तो हिंदी में मैं इतना ही बोल सकता हूँ कि सोचो वही जो बेहिचक बोल सको, और बोलो वही जिसके नीचे हस्ताक्षर कर सको. In case we can talk something on which I can sign, and I can think something on which I can talk, I think that is something which is desirable. Otherwise, we have seminars and programs where we listen to lots of things. But I would just repeat, सोचो वही जो बेहिचक बोल सको, उसी का विचार करो जो आपके मन से आप बोल सकते हो, और बोलो वही जिसके नीचे हस्ताक्षर कर सको. That means you talk only that on which you are willing to sign. I think if all of us decide to follow those principles, a lot of good things will emerge out of what is called a good governance, and not only corporate governance. Thank you very much. That's all. Thank you.
Thank you, sir, for such a lovely session. And sir, before we move to a formal vote of thanks, I would request the WRC office to put up the questions. And in the meanwhile, sir, I have also received a couple of questions. So let me also welcome CS Shailesh Haribhakti, sir, welcome. And Mukund, sir, for you, two questions as Mishraji puts up the others. Is our country ready for good and effective governance practices? Question mark. Let's not look to few companies of NSE or BSE, but overall more than 5,000 companies.
I think answer is absolutely obvious. I did not know the question when I said my last comment in Hindi. I think the comment in Hindi is the answer to this point. All of us as citizens of this country with 132 crore population, out of that, let's say about 20 crores working in different areas. If we decide that we are ready, we are absolutely ready. Sometimes what happens is we expect others to do something, but I think a self-questioning is very, very essential. I appreciate the question, but I would only say, and again, let me take some other hit. There are different types of people who are existing in the world, but I would broadly divide them into two parts. And those are, there are people who mind, but they do not matter. And there are people who matter, but they do not mind. I think when you go back, kindly look at this question, this statement. I think all of us as professionals and being educated people, we should be such people who mind, but we should also matter. And I think when we have these two abilities, all companies will be ready to do it. But mostly we expect others to do it. I think the introspection and self-improvement is very, very essential.
Thank you, sir. Thank you. I think quite well answered. Sir, before we go to the screen, there is one more question. And sir, is too much regulations killing the whole concept of governance? And that's why good, knowledgeable, experienced people are afraid to be independent director.
Partially, yes, but mostly no. And I would say why. See, if you look at the history of corporate governance over a period of time, it's only because the rules came that the governance started moving in a direction. If majority of the company are following it, then I think the rules can be as simple as possible. However, I do appreciate that unfortunately the laws in our country are such that they to a great extent still believe that the people are there not to follow the law, and therefore the provisions in the law many times are such that very, very difficult to implement all full stops and commas. I think that difficulty does remain. But I think that is an area where professional bodies like ours and many other business bodies must keep on representing the government to amend those laws. But I think as far as we are concerned, at individual level, we must follow what it is. Now, is too much of too much of expectation keeping away the independent directors? Answer would be, in this field, you must know the first thing is where to say no. I think that no must be in the pocket all the time. Because if you do not know which company you would say no, you might end up in going into a wrong situation. I think that's the only way I would look at it.
Thank you, sir. Thank you. I think point well taken. Sir, there are two more questions on the screen. I will take it quickly,
Yeah,
and then we'll move to the. Yes, sir.
Yeah.
So,
You
sir,
made a,
I will read for you, sir.
Please, yeah.
Yes, sir. So you made a very good point regarding agenda items being pushed quickly towards the end near lunch break. Could you also please guide how to deal with such agenda items? Sometimes it may be truly urgent for the business and may not be advisable for the board to stall or defer.
I think the point I made purposely so that at least let me find out whether somebody picks up the point. A chairman of a company very clearly knows how to spell out his item. I can see the chairman of WIRC smiling on this face because this principle can apply to WIRC also. A chairman knows exactly what items he wants to push around, and therefore I think when an item comes before lunch break or before evening, and you know that this is a very important item, you must have the courage of conviction to say, look, either we delay the lunch or we delay the meeting, but this item requires a discussion. Without discussion, the item cannot be concluded. And I think if you put forward the point properly, there will be at least one or two other board members who will pick up your point. And that's what I meant earlier when I said you should not be a solitary soldier. So if 2 or 3 board members pick up the point, the chairman will be in a way pushed to take the item for discussion. Next.
I agree, sir. Sir, the next point is, the question is it good practice for independent directors to meet the statutory auditors separately without management, and the promoters to seek and give feedback on their work and also to set expectations around their work?
I think this is a recommended practice, and there are companies which do that. The independent directors, especially the audit people, does meet the statutory auditors without the presence of the management, broadly to understand whether auditors get all the details, cooperation, etc. I think it's a good practice, and that is something which can be encouraged.
Okay, sir.
Next.
Sir,
Yeah.
one more question is there, sir. And after this, we'll stop and we'll move to the next session then. The corporate governance report is presented in the annual report only once in a year with many cases of corporate failure and fraud and failure of corporate governance. Is it time to rethink about the frequency and areas of coverage within the CG report?
A very good question, but please don't mind if I answer it in a slightly difficult manner. A report only communicates what is happening in reality. A report does not bring out something new. So if the people who are sitting in the board know exactly whether their governance is right or not, whether report is once in a year or even once in 2 years, it would not matter. But if the people on the board know that they are doing wrong things, even a monthly report would not change them. So I would say that a report is a matter of details, but all of us who sit on the board know exactly what we are doing. If you are doing something which is not correct, I think we need to improve upon it immediately. If I look at it as a shareholder, I would say these kind of reports are normally indicators of things to come. And therefore, I think once in a year is a reasonable period. Beyond that, it might become too much to ponder over. That's all.
Thank you, sir. Thank you. Thanks a lot, sir. We are extremely grateful. Yes, Arpit.
2 more questions have just cropped up, so I would just take them.
Okay.
Sir, and these are very practical issues that have come up. So there was so Tirth Raj Khod Sahab has asked this question. There was an article which said independent directors is a myth. What are your comments and what do you think? Why are these views getting bred? And is there a gap in expectation of service by independent directors?
See, I think this is one subject on which as I said, everybody has a view. Now, independent director does not mean that he is somebody who stands in the road and keeps on shouting about everything. Independent director does not mean that he is not friendly to anybody. Independent director would mean that he has his views, he knows the subject, and he expresses it very properly. So I think there are people and people, and therefore there are good people who are distinguished between from others. So I won't say it's a myth, but it is really a section of the society. So really, if the society has good people, the boards will get good people. But if it is a society which is not having good people, the boards also would not get a reasonably good people. I think that's the way I would look at it.
Right, sir. And so there's one more question by Amit Patel, which says about the remuneration paid to the independent directors. Do you feel it is commensurate enough due to the time that they are spending on the board and the responsibilities that these directors bear? So any point on these remuneration aspect?
This is one area which I had not touched because I thought that might get covered subsequently somewhere. This is always a double-edged weapon. Some people in the society believe that if these are independent directors, why they should be paid at all. So there's a lot of shouting on people being paid in the form of sitting fees or commission. At the same time, if you look at people who are sitting on the board and the time that they're spending, I think it's a service that these people are giving to the company, and therefore the companies do pay that. I think if you look at the nature of work that is done, I think it is necessary for the independent directors to be paid in a reasonable manner. What is reasonable is always a word which is very, very deceptive. It's like saying that all of us should work as good citizens. Now, what is good citizen is always a very subjective matter. But I would believe that, yes, I think a reasonable remuneration is absolutely necessary because it is not a social service. See, if you are working as a charitable trustee, then I would say it's a different matter. But it's a commercial organization running business matter. Therefore, there is no reason for company not to pay to independent directors.
Right,
Thank you, sir. Thank you for all the input. And sir, with that, now I request my colleague in Regional Council, C. Arpit Kabra, for a formal vote of thanks for this session, sir. Arpit, over to you.
Sir, I think the amount of questions and the amount of deliberations that has happened, that itself reflects the mood and the concentration of people. I think the best thing that can happen to a speaker is that the people are focused, and our meter shows almost 93% people are focused in this webinar. So this, I'm using a data analytics tool to tell you. So this has been a fantastic session, and it's just been a eye opener in terms of really what are the responsibilities now, and with the changing dynamics. And as indicated by Suresh Prabhu sir also, sir, what I personally also believe is it is just not one hand that can really matter. Well, it takes two to tango. So although if the ecosystem is becoming dynamic, and if there are a lot of bottlenecks that are being now created for anything to be done wrong, independent directors should now in their role stand up and take this opportunity to be a very, very dynamic force in order to ensure that these corporate governance are enforced very, very appropriately. And I think, sir, we had Rohit Sharma and you to kick off this session in a fantastic manner. So thank you for delivering this amazing talk. And it's a privilege always, sir, to listen to you. And thank you for accepting this invitation and coming and speaking to us, sir. And on this note, thank you, sir. Next, we have friends. We have
Shailesh, all the best to you.
Yes. So as one of my person under whom I've started my career, and it's a privilege to share this screen again with the modern, if I would to tell you, thinker, mentor, and everything that can be encompassed in the role of an advisor. SVH, we fondly call him Shailesh Haribhakti sir. And as Suresh Prabhu sir mentioned, these two are the people. If these two are on board on any particular session, I think you are covering almost all the big companies of India, because these are the people who represent as the independent director of these companies. So we have with us Shailesh Haribhakti sir. Thank you, sir, for taking out time and accepting this invitation for this session today. And as you can see, the mood has been set, and it's a very critical and a very, very informed sessions that we are having, and a lot of in terms of board dynamics that we are talking about inside and beyond. Sir, we would like to have your insights on this. And to present before Shailesh sir, I'll request Murtuza Bhai, our Secretary WIRC, to please formally introduce personality SVH, sir.
Thank you, Arpit.
Yeah.
Sir, I'll keep it brief. So although the biodata is very long, I'll try to keep it as brief as possible, sir. So Mr. Shailesh Haribhakti is a career chartered accountant and cost accountant and a certified internal auditor, financial planner, and fraud examiner. His career spans over 4 decades. He is currently chairman of Shailesh Haribhakti and Associates Chartered Accountants. He is the non-executive chairman of L&T Finance Holdings Limited, L&T Mutual Fund, Future Lifestyle, NSDL E-Governance Infrastructure Limited, and many more companies. His other directorship are Brookfield, Torrent Pharma, and many more. So a long list of companies where he is serving on the board. His activities include digital board governance, MSME verification, diligence interim management, asset tracing and shared services, impact investing, data-led lending and counterparty assessment and automated treasury and foreign exchange management, business transformation using exponential technology and outsourcing. Mr. Haribhakti actively promotes shared value creation and a green environment through his own enterprise and his leadership roles as chairman of the CSR committees of some of the boards that he serves on. Mr. Haribhakti has a passion for teaching, writing, and public speaking, and is associated with the Indian Institute of Management as visiting faculty from 1981 to 1983. He frequently contributes in views on various public forums. Mr. Haribhakti has in the past been engaged as chairman of NPS Trust. He is also the past chairman of Western India Regional Council of the Institute of Chartered Accountants of India, Financial Planning and Standard Board, and he has been president of Indian Merchant Chambers, Rotary Club of Mumbai, Institute of Internal Auditors, Mumbai chapter, Bombay Management Association, and many more. So a tall personality and apt speaker for the subject. And sir, welcome. And over to you.
Thank you very much, Murtuza and Arpit. I hope all of you can listen to me properly. Is
Yes,
my
sir,
audio
absolutely.
fine? Okay.
Absolutely.
Lovely. Somebody who is in charge of the controls just changed the screen format. So can it come back to where it was a little while
Sir,
ago?
I'll just do that, sir.
Yeah. So ladies and gentlemen, it's an absolute delight to be here. And I'd like to thank WIRC for giving me this wonderful honor and great opportunity to communicate with my dear fellow professionals. As Arpit very briefly mentioned, and as you read in some of the things that I'm doing, I want to first acknowledge that Mukund gives you such a fantastic in-depth knowledge of sections 166 and 149 of the Companies Act 2013 that I will spend only 3 minutes to summarize for you what Schedule 4 enjoins upon all of us as board members as duties, and then I will take you to what it will take to make you future ready. So I'll spend a few minutes on the present and then I'll move swiftly to the future. So here are the 13 things that Schedule 4. Yes.
So you got the screen share option. If you can please accept it.
I'm not able to access anything. It's not working. Now it is perfect. Perfect. This is the perfect. Again, it's gone back.
So it will come again, sir. Sorry.
Somebody should keep it steady where it was a little while ago.
If you can just select now once. Has it come to you?
Nope. Still it is. I'm not able to do anything which can change because it just says file, whiteboard, and website. I don't know why. It seems to have made me a presenter, which I don't want to be. I just want to be a speaker. So you can remove all this presentation, remove the rights of a presenter, and you'll be all right. Ah, there you are. You're no longer presenter. That's what I want to be. All right. Thank you. So here are the 13 things that Schedule 4 enjoins upon us as directors. You need to have a proper induction. You need to have a clear view of what your duties are. You are free to take advice from outside legal help and have the company pay for it. You are encouraged to have full attendance at board meetings, committee meetings, general meetings. You ought to be concerned about the running of the company. Make sure that you understand the affairs of the company and the environment in which your company operates. You should not permit any obstruction to the normal running of the company. And there should be no deliberate attempt to do anything that will affect the interest of the company. You should make sure that the company has a great vigil mechanism. You must make sure that fraud, unethical conduct, and other such things are prevented. And we know of the draconian 14A subsection of 149, which can actually have all your assets seized and put you behind bars if fraud is discovered and it has happened on your watch. And therefore, we need to be very careful about it. You have to protect the company and the shareholders and its employees and everybody else from being hurt and from their interest being decimated by bad conduct. You must minute your dissent where you need to do that and maintain confidentiality. These are today's constructs of what is expected of a board member. But what would you need tomorrow to be a great member of a responsible board? And I loved the way Mukund in his inevitable and inimitable style used Hindi to make sure that we understood the message of being fully responsible and committed to board service. But let me take 12 issues today which make you future ready. And I'll go over each one of them depending on the time that we have to spend. I'd like to give you 10 or 15 minutes for an interaction and a question answer. So I will end sharp at 7:45, within less than an hour. So there are 12 issues that I would suggest will make you future ready. The first and perhaps most important issue, and there I would like to start by saying that you need to love your planet. You need to love the human race, and you need to have a deep connect with good governance. If you don't have these three, then please don't put yourself up for board service. Because without a soul of E, S, and G, board service will not remain meaningful. For two practical reasons, but more importantly, the spiritual reason which I mentioned, that if you don't love it, don't do it. So what are the practical things that drive this whole movement towards ESG? One is that no international movement, cross-border investment, will happen if you are not in compliance with the ESG framework. E stands for environmental stewardship. Your company, the entity that you are governing, has to be a steward of the environment. It is our planet. It is the only planet we have. We have already misutilized it, over-abused it, and are in danger of not being able to have it remain sustainable for human habitation. S stands for social responsibility. And it is critically important, particularly in times like this, that that happens, because investment will not flow if you're not seen to be socially responsible. The other reason why this has become mandatory is that the youngsters of today do not wish to join a company which does not have an ESG soul. And G obviously stands for great governance. So if you don't have that driving desire to conform to the law, to be the steward, to be the custodian, to be the fiduciary, if you think that those responsibilities are too much or are not sufficiently remunerated or take up too much of your time, then there has to be a rethink. But it is extraordinarily important to be future ready, to understand what is the meaning of E, S, and G. And so I'd like to spend a few minutes on talking about how you can bring meaning to these three letters. And the way to do that is to think about the 17 Sustainable Development Goals that the United Nations gave us in 2015. Last month, we had 2 board meetings with single agendas. One was on sustainability in Ambuja Cement and ACC. And why was there this single agenda meeting? Because these 2 companies have made a commitment to the environment, which they have explicitly put in the prospectus for a very large bond issue that they raised globally. And the terms of that bond are that if we actually meet the commitments that we are making, then the interest rate on the bonds should be lowered. And if we don't, then that interest rate will go high. That is the commitment and the confidence that these companies at the holding level at LafargeHolcim have made globally. And that is why sustainability became such an important issue. What does it mean? It means broadly 3 things. It means that you will not pollute and you will not use more resources than are due to you. So you need to make sure that you don't have emissions in the air. You do not dirty the water that is used around you. That you make sure that through your manufacturing operation, you are able to address some of the pressing issues of the places that you work in. So we have a program which mandates that we will take municipal waste and burn it in our kilns. And this is a program which happens across the globe. Now, if these municipal wastes are not burnt in the cement and steel kilns, they go into landfills. And the landfills cause untold misery to humankind. You just have to visit, go one day, to actually experience what happens in a methane emitting landfill. You simply can't breathe. You stay there for 3 minutes and you feel like moving out from there. That is the extent to which we need to address the issue of what do we do with all of this waste that we are generating. The second is that you get involved in what is called the circular economy. You don't necessarily use motive power, because one of the biggest causes of pollution is that we use fossil fuels for getting our energy. Now, if you can move rapidly and almost completely to renewables, so you should do waste heat recovery that reduces the need for power. You do this AFR or alternative fuel kind of strategy, and you move to actually using renewable power. India as a nation has gone to 30% in terms of the usage of renewable power. We need to go to 90% in order to meet our commitments. And the final thing is that you need to make sure that you can actually cause the footprint of pollution to go down. And so in the long run, companies such as this are committing to making sure that a large part of what they are manufacturing will come from the debris of that which is dismantled. And so you can imagine a future when no new cement may need to be made, because what you need in terms of building material can be regenerated from extractions from buildings that have actually been brought down in a systematic manner. So that is the full definition of the circular economy. But in order to give this reality and substance, we have the 17 SDGs of the United Nations. And each one of these as a cohort can go into one of the E or S or G frameworks. So what we have done is we have gone and created this kind of a sub grouping of the SDGs to make sure that we can conform to the ESG framework. For each one of the items that we are tracking, there is a measure and there's accountability. And it is pushed down to the KRAs of the people who are responsible to make sure that it is delivered. I must tell you that the motivation to actually do this is so high that if you listen to the people who are engaged in this activity, you as a board member feel so happy and so satisfied that concrete good action is being taken to make sure that our world becomes a better place to live in. And that becomes a continuous and fulfilling exercise on an ongoing basis. So that is the framework of ESGs supported by the SDGs, all trackable by matrices, and everything governed by people who have taken that responsibility and that KRA to deliver on it. So that's the basic framework that you are providing oversight to as a board member of the future. But it's not enough to just have this oversight. It is also important to report on what are the outcomes that you have delivered. And it is no longer the language of accounting and the language of financial reporting is hopelessly inadequate to express what you have done in terms of ES and G framework. And therefore, you need to report on the 6 capitals of integrated reporting and thereby develop what I would like to call as a future-oriented integrated thinking as a board member. So what does this integrated thinking framework involve? You got to think of what you're doing to the assets that are in your custody. Think of it. Why are Brookfield and Blackstone and all the people who are doing these REITs so successful all over the world? It is because they realized that an asset must be kept in its best shape at all times through its effective life. The experience of anybody using that asset must be astounding, has to be great. For those of us who had walked into the Express Towers building before Blackstone took over and walk into it today, you will understand what I mean by actually adding value to physical assets. It's unbelievable. what a new experience can be created when you are actually tracking and enhancing the value of our physical assets. Let me give you another example. At many of the companies that I sit on the board of, we made the workplace seem so safe, so well sanitized, and so in conformity with the norms of social distancing and making sure that you don't, through the touch, transmit the COVID pandemic, that people found that it was better and safer for them to come to work as soon as the lockdowns opened up than to stay at home. So to that extent, the ESG framework drove us to make workplaces safer, sanitized, and more prone to working and feel safer for the people. Also, at every board meeting, there is a first item on the agenda to discuss any accident which resulted in a fatality of almost anybody from anywhere who either was bringing something to our plants or taking something away, or was just a contract worker. We don't make any distinctions. We say that every human life is valuable, and it's our responsibility to keep it safe. No harm, zero harm is the motto that these companies are now. And now you as a board member will have to oversee that zero harm comes to the human beings who are associated with the company that you're on the board of. So that's the natural capital, the physical capital. Then there is the brand capital, or the capital that you have built up, which actually signifies the trust that people can keep in you. Why do you go to a shop and ask for a particular brand and believe that that brand will give you the satisfaction for the price that you are paying? And therefore you automatically ask for your favorite brand of biscuits or toothpaste or anything, any consumer good that you are used to. And the same goes for a service. The same goes for many, many manufactured products today, where the trust and the level of quality and consistency and satisfaction in use must be made very explicit. Then there is the relationship capital, the relationships that you have built with your customers, with your suppliers. Think about the supply chain. And that's the second part that you need to get involved with as a board member now. You need to go all the way down to the last element of your supply chain and make sure that human rights and the fair treatment to all happens through the entire value chain. It's not a simple matter of switching the supply chain from China to India and you're done. No, you need to make sure that every subcontractor, every person who comes to work is treated fairly, gets a fair wage, all the legal dues to them are paid, and that there is a proper treatment of the persons who are working for you. That becomes your responsibility in the future as a good director. So that's the relationship capital. Then there is the environmental capital. What have you done to the atmosphere, the air that you are breathing and that you're making the world breathe around your plants? Is that clean? Does it have pollutants that you have emitted? What have you done to reduce them? What is your contribution? How are you doing carbon capture and all of that? So that's your environmental capital. And finally, it's your intellectual capital that you need to track and see what innovations that you have made have resulted in the innovations that will lead to the promise of better products and services in the future. So this is a beautiful framework that has emerged in the world, where you have ESG, which is driven by investments and by people wanting to join you. Subsumed are the 17 SDG goals, and the output is reported by way of the integrated reporting framework under 6 capitals. And you as a board member are required to oversee this whole process. So that's the first one of the 12 elements that I talked about. The second I had subsumed in my first one, which is your complete recognition that every person you deal with should be dealt with fairly in terms of the law, in light of the regulations. Now, we have these 4 labor codes, which are really social welfare codes, where the only choice that India has really is to create formal, well-structured, decent work. And that is also SDG 8, where you need to create decent work and economic growth both together. So you need to be cognizant of those human rights. You can't make people work in dark spots. You can't make people work in insanitary or badly ventilated spaces. You need to make sure that there is that ability to make sure that people can work comfortably, get paid, and are treated well as human beings. Right down to this. So if there is child labor, for example, at some element of your value chain, it can make you lose 40% of your market cap. And that's what happened just 6 months ago when it was discovered that a textile major had child labor working in some part. And we know what happened when the big story of child labor broke out and the unsafe conditions resulted in the collapse of a major manufacturing facility. So therefore, human rights and supply chain to be taken care of in a proper manner. Third and most important thing as a future board member that you will have to mind is to make sure that the board has diversity, equity, and inclusion. All these 3 are critically important. And diversity is of all kinds. It's not just gender, it's not just ethnicity, it's sexual orientation, it's age, it's educational orientation, it's the lived life that you have lived. The whole idea. Do you know that there is a statue of what is called the fearless girl, which stands in front of the big bull in New York? And that symbol, which was put up by State Street, completely changed the diversity approach of boards across the globe. Suddenly, today we find that 30% of directors on the FTSE 100 are women. In America, diversity has reached 34%. Of course, this is gender diversity, which is trackable. The ethnic diversity is still at a much lower level, and therefore Black Lives Count has become such an important issue in the US. And this percolates and reflects to the valuation that companies start getting. This is becoming so critical to deal with as a board issue at the highest levels. And therefore, you need to make sure that you give everybody a chance to speak out at the board. It becomes the chairman's responsibility to do that. That's inclusivity. You make sure that nobody feels at all conscious about asking or raising any issue at the board level. In fact, I have seen good chairpersons actually making sure that they go around the table and elicit the views of board members. This has become critically important. So that's number 3. We started with ESG, moved into human rights and supply chain, went into diversity, equity, and inclusiveness, and then we go into the favorite subject of chartered accountants, enterprise risk management. Do you know which was the biggest risk that arose in 2020? Even bigger than COVID? It was the fact that 2020 was the warmest year in recorded history. We are on a timeline which says that we got to limit warming to 1.5 degrees Celsius. If we don't do that, life as we know it can become questionable. And we are on a path of 3% right now. So if everybody does not take climate action instantaneously, and the world does not switch in every aspect, embracing new technology to actually bring down warming, we are in for much bigger endogenous risk than even the pandemic of COVID. And that is really the big lesson of ERM, that it is not the endogenous risks that we need to track. You know, when the financial crisis happened, or when currencies flopped, or when the dot-com bust happened, these were things that we knew were coming. We could anticipate them. But COVID, nobody could have guessed. Global warming and the climate, the temperature rising beyond what is tolerable by the human race, nobody can tolerate. That is why Jeff Bezos spends $2 billion every year to see whether there's an alternative. The risk management that he's thinking about is trying to create habitats outside our planet as our planet becomes unlivable. He spends $2 billion every year on this. Elon Musk became the second richest man on earth because he sent out successfully, and in a repeated rocket, some of which he has 3D printed, repeatable rocket, to create geosynchronous satellites which will give us unlimited Wi-Fi to the world over a period of time. But this is the kind of thought process on exogenous risks that we need to embed and bring into our thinking when we are thinking of ERM. It's not just the risk of a supply chain going awry. That is, of course, important. And it is important to make sure that we are ready to take on whatever advantage we can of the failures in other parts of the world. But that's not enough. We need to take care of these risks and plan for a future where we are conscious on all of these dimensions, plus the dimensions of things like cybersecurity. It has become one of the most discussed, most time spent items on boards today. And I would recommend strongly that this is one area that we as chartered accountants can take a leadership role, because we understand what to do to protect the perimeter, to make sure that everybody who is traveling into our territory is trackable, and every action that people are performing is trackable. But it should not only be trackable, it should be analyzable, and the pattern should become visible, and the non-intuitive patterns must be examined for cause. Only then, through an SOC, will you be able to get some good information. And then you got to be prepared. You got to be resilient. You got to make sure that if you have a denial of service attack, how can you quickly flip to an alternative IT system? Or if you are shut down, then how can you move between cloud service and on-prem service? And really, the world is now moving so rapidly to the digital cloud that you as a board member are now pushed into taking that resource allocation decision to get your company onto the cloud. If you're not on the cloud, you're so exposed today because the entire substratum of your existence is based on ever working information technology. That's your biggest risk. You can't allow your operations to stop, because to stop and restart can be extraordinarily costly. And therefore, ERM has to be looked at, not in terms of those 17, 20 risks that we put in a register and then identify what are the mitigants and assign people and then track it in a simplistic way, but to look at how the whole risk framework surrounding us in the environment. You remember Schedule 4, you need to understand the environment. This is what it is. So what can you do to make sure that you can continue in existence uninterrupted? Your biggest risk is the risk of interruption, and you need to protect your entity that you are governing against it. So endogenous, exogenous risks, doing the macro, doing the cyber, doing the migration of risk, putting it all in a framework. I love the COSO framework. I love the COSO framework along with the challenge of the Japanese system of making sure that you're on a continuous improvement path. So what I do is I make it measurable. Every aspect of the ERM framework, I ask the boards that I sit on to measure it. And I like to see the scores as they evolve. And I want to see what is the underlying cause of those scores not improving at a rate that I would expect, given the quantum of money that we have allocated to making things happen. And so this is an exercise that we as chartered accountants can get deeply engaged in. We understand this space. For us, this is second nature. It's also part of the vigil mechanism. So what we are doing in many boards now is redefining vigil to mean everything from system, process, proactive forensics, making sure that policies are right, making sure that audits, internal audits, statutory audits, internal check systems, the SOC, the cybersecurity, all of this works together, the whistleblowing, all of this works together to protect the enterprise from being hurt, because risk is allowed to travel in from outside, either through people or through failure of process or through intentional hijacking, which happens in the cybersecurity kind of space. And so it becomes critically important for us as board members, as future-oriented board members, to make sure that we are cognizant of this expanded definition of the vigil mechanism. And we do everything we can to bring to bear our talent and our abilities to make sure that this extended definition of vigil mechanism gets actually implemented on the ground. From there, we move to item number 5, which is how do we become outcome-based? How do we track for outcomes? Now we know that the digital world is dependent on the 7 Ds. The 7 Ds of disruption, deception, digitalization, democratization, demonetization, delocalization, and making everything not expressed in terms of price, but in terms of value. Now, if these are the outcomes that we want to encourage, the 7 Ds of the new world, of the digital world, then we need to make sure that the boards that we sit on are able to see what is happening in the outcomes that we are delivering as a result of all the actions we are taking. Give you 2-3 examples to make the point clear. We were transporting fly ash in the cement companies that we are dealing with, that I'm on the board of, by trucks, because that was the natural way to do it. So from the power plant, we would load the fly ash onto trucks and do the full distance journey to our plants, make sure that they went into our kilns. we discovered that if we are in a position to transport fly ash after it's watered down by rail, we can save cost and we can do it at huge scale and far better quantity. Once we started doing it, we are able to sense that the whole cost equation and the whole energy equation and the whole environmental stewardship idea, which we talked about in item number 1, all got fulfilled. And therefore, this was an outcome which made sense. Take another example. The consumer goods company that we are working with, which I'm on the board of, decided in the pandemic phase to actually go heavily into e-commerce. And the kind of products that they were selling from physical locations were such that they got amenable to e-commerce by better definition, by better channel choice. And as soon as we made that change in orientation, the quantum of e-commerce as a percentage of the mix between physical and e-commerce just shot up and changed the whole equation and performance to such an extent that we had the best quarter ever in the history of the company last quarter. Now that is a remarkable outcome that could be achieved because the management was vigilant and the board gave it full support, full freedom, full resource allocation to make these innovative changes and to come up with a completely revised mix. Same thing happened when we decided in Blue Star, for example, to reorient our supply chain because of the China issue that was emerging. A war room was established so that every supply, every loading of a ship, every unloading on an Indian port was fully trackable and was available as decision-making support to the top management team. And these are the kind of outcomes that can actually change the entire way that a company works. These are the things that as board members, you get an opportunity to actually see, understand, learn from, give support to, and in some cases also help to innovate. Because not everybody has heard of the same thing. The fact that you have these multiple experiences and can bring them to bear makes you a better future-oriented board member. Next is soul, culture, one truth. Very critical. As board members, it becomes your responsibility to establish that soul, to be the custodians of the culture. Now, you can't suddenly switch to being a good boy. You know, if you don't have those systems, processes, cultural artifacts which you have cultivated and curated over years and years of effort and support and praise and evaluation, you'll simply not be ready for the kind of situation that we faced in the last 8 months. So, Chairman of Nestle was talking to us, and it was a fantastic story of people who did things voluntarily, or the culture of Nestle. It did not take anything, there was no policy document which was written down somewhere in the company, is this thing to do what this person did. There was a person who needed a particular supply which was available only from Nestle. So he actually took his own car, drove down, collected it, and make sure it reached the customer. And that was a part of the culture which enabled that person to take that fabulous decision just spontaneously and go out and do it. And he did it. And he didn't get any prize for it. But the recognition by the chairman of the company was itself what made all the difference to making sure that this culture gets re-emphasized. Hindustan Lever, for example, has a culture which does not permit wrongdoing to happen. The entire system will clamp down on you if you are found to be doing something inappropriate. That's the biggest insurance that companies have against fraud, malpractice, bad practice, and all of that. And so it becomes very important to embrace transparency, disclosure, complete autonomy, complete integrity, to make sure that nobody feels that they must either hide behind some screen or do something surreptitiously. But they're encouraged because the culture says that you are permitted to do this. And you don't know what you'll be rewarded, but you may just be recognized. And that's enough to maintain and promote that culture. And many companies today are adopting the idea of having a single source of truth. And there are many ways we can talk about it. I could talk about it for a whole hour on how do you create a single source of truth. Everybody sees it as the truth. That's the critical challenge that we have. The seventh element I want to talk about as a future-oriented board member is to be in a position to challenge. Question which is asked is, how can you bite the hand that feeds you? I think it's a wrong question, because what you need to do is to become a collaborator. You need to become somebody because of the oversight. Just the fact that you are witnessing is enough of a moral imperative to do the right thing. And I see this playing out simply because I can see that vigilance, reporting, all the processes that we know are what enable challenge to actually take place. And we encourage this challenge at the Guideposts. And you should do that when you become a director and you are overseeing what's going on in a company. Because how does an internal auditor get a sense of accomplishment? How does the internal auditor get a sense that he or she is free to report courageously, fearlessly? How can you encourage competence, courage, and care from people who are providing these services to you if you do not have the ability to challenge? And if it is challenged, then you should have the ability and the moral capital to make sure that that challenge is actually picked up by the enterprise and used to make sure that things get improved, to meet the challenge and get to a better position than what it was. So I do not permit any internal audit findings to remain unimplemented. That is a continuous effort at every audit committee to make sure that we don't leave any recommendation that has been accepted behind. Same goes for statutory auditors. Same goes for any ideas that have come up through the ERM system or through the vigil mechanism or through the POSH frameworks. Do not permit that to happen. And if there are situations which are not acceptable to the company, the punishment has to be immediate, it has to be severe, it has to be telling, and it has to go around the entire organization to make sure that nobody will dare to repeat it. That's what creates the culture. And that's what creates the desire and the ability to challenge respectfully, because what you are trying to do is to try and put the entire enterprise on the next path of growth and on the next path of achieving better outcomes. Protection of liability of independent directors and people who are not, I mentioned to you about if SFI actually even recognizes the possibility of a fraud, it is now legally possible for an order to be passed by the NCLT to block all your personal assets and actually to send you to prison if fraud is discovered while you are on the watch. And that is a serious matter where no matter which board you sit on, the challenge to make sure that internal control systems, internal audits, fraud management systems, foreign exchange systems, and all are actually in place, reviewed, cross-checked, and made certain that they are working throughout the year becomes a responsibility for you as a future board member. Very critical. And you can ask as much. No need to worry about lunch and dinner and extended board meetings or anything. Don't bother about it. Just make sure that you get down to the bottom of the root cause of what made it happen. And make sure that you diligently record it. Now, the next two ideas are the most exciting part of our work on boards as future directors. And that is, how do we specify the technology roadmap that a company must adopt? Let me give you 3 or 4 chilling examples of how technology is going to change everything that we hold as normal today. So take the idea of virtual reality, augmented reality, and middle reality. You know, there was a time when a virtual reality system was the size of a huge refrigerator, and the equipment that you had to wear to get a sense of a 3D virtual reality was so cumbersome and heavy that most people just couldn't suffer even wearing it. Today, Facebook, Apple, Google, Microsoft, Samsung on the other side of the world, Alibaba, Tencent, all of them are in the space of creating virtual reality. So what is happening? What will be delivered? A board meeting happening 3 years from today can call in a 3D live experience of what is happening right now. Or let's say that there is a photo feed of what was happening in a faraway distanced location where a crime was about to be committed. And you want to see the actual virtual pictures coming from that feed in the board meeting. Board meetings will be in a position to actually recreate, reconstruct that experience. All you need to do is to wear those Oculus glasses, which ultimately will turn to more or less the frame that I'm wearing, with far more sensitivity and ability to capture and recreate 3-dimensional systems. And you can actually be in that position. Now think of what can happen to education, awareness, healthcare, all of that for your people, for your company, if you are in the middle of a VR, AR revolution. That's what we are going through right now, today. Take another part of this revolution. Last week, they launched a product which you can hold in your hand, okay, one palm. And what it does is it embeds content, either that you have created. So it could have graphs and it could have representations of data. It could have histograms. It could have whatever way that you want to express yourself. It could have video. It could have audio. It could have text. It could have a mixture of all of this. You could also have curated content like YouTube has. It's curated content which is presented to you based on your repeat viewing habits, which are tracked at the background by the algo. So what then happens is that you can capture this either self-created content or content that is streamed into your device and replay it on any surface. So you don't need a screen to run a projection. You can project it on your wall. In the board meeting, you're sitting there, and on the wall is a presentation. Each one of you has this empowered instrument, which has this entire access to what you are actually wanting to present, and that will be available to present on any screen. That's the future of technology. And then you go into artificial intelligence, machine learning. The whole idea of coding is over. All that you need now is the ability to make sure that you can prescribe variables that you want to sit on top of a system and pull data. We, in a company that I chair, have been able to track 18 lakh companies in our country and on 54 parameters. And we are able to now give a score and rank them, compare them one against the other, simply because it is possible for compute power to rise to the occasion. There's unlimited data storage, unlimited compute power. IBM announced a 115 qubits quantum computer last week, which was in the area of 10 and 12 qubits a year ago. So we've jumped in computing power to 10x. And we have jumped in storage power to almost limitless storage. And the new access to Wi-Fi that is being created, it's being created terrestrially, it's being created on the ground, it's being created through satellites, through balloons, through bubbles, through almost every means that you can create Wi-Fi for ubiquitous usage. Because with 5G and Wi-Fi, you have a technology infrastructure which leaves only your imagination to take you to where you want to go. It is so simple. It has become so enabling and so empowering that you, when you can access it in the right way, can do virtually anything that you can think of. So then what happens is at the board, you can choose moonshots. So you can define that I want to do these 3 or 4 things, which will converge these emerging technologies and bring them to bear to my work. And you can then do exponential thinking, no incremental thinking. We have to give up this whole idea of incremental thinking, 5% growth, 10% growth, 15% growth. Growth can be 10x if you can disrupt and if you can think exponentially. And you can bring all these technologies to come and converge and be there where you need it to meet your purpose. I would refer you to 2 books which are extraordinary. One is a book by Salim Ismail called exactly that, Exponential Organizations. And the other book is a book called The Future is Faster Than You Think by Peter Diamandis. It is a must read for any board member because what it does is it enables you to get an infrastructure of thinking, which is what a future board member must have. You need to rewire your brains in a way that you can think out of the box. You can think exponentially. You can think outside in, inside out, in order that you can make that vital, completely out of the box contribution to the board that you are serving on. And so those are my items 9 and 10 to embrace initiatives, moonshots, technology, digitalization, making sure that you bring every technology that you can to bear. We are taking on challenges like having a daily P&L, a daily balance sheet, so that past we know exactly what happened, so that we can then dwell on the future. And we want to make sure that that past is so accurate and so dependable and reliable that you can actually make good sense of it. So that's where we are pushing all our resources in the larger companies to make sure that we have this online, real-time, up-to-date information and an information-rich board meeting, which will draw upon these information resources, which really are the seventh part of the capital of most companies, which people are not recognizing today. But the whole idea of data lakes is becoming obsolete. Because why should you silo your data? Why should your data lie in a data lake? Your data should be in a data ocean, and it should be streaming, and it should be contextual, and it should be ecosystem oriented. It's only then can you actually make decisions which will change the future, which is what you're about to do as a good board member. That's your duty. That's what you're supposed to do. And therefore, very critical to embrace, but first you need to get into the depth. And I would recommend three things that all of us who want to be future-oriented directors ought to steep into. One is a deep study of sustainability. And that, to my mind, is absolutely critical. Can't lay enough emphasis on that. Second is a study of technology and how technology is delivering value to the world. And third is actually spirituality, which gives you the kind of good sense that Mukund talked about, that I talked about at the beginning of my now almost 1 hour continuous lecture. And so I'll go to the last 2 points very quickly because I'm running out of time. The 11th point is that you need refreshment at all times. You need refreshment of people, of the work that people do, the jobs that people do. You need refreshment in your role on the board. So for example, in one of the companies, we decided that we'll have 2 sets of committees, one which deal with the past and one which deal with only the future. So we have a separate future-oriented sustainability committee, a separate future-oriented digitalization committee, a separate future-oriented succession planning committee. And what takes care of the past, like the audit, the vigilance, the ERM, they are, but both the outputs from all of these committees are brought to bear to one board meeting. And it's also important to make sure that the board refreshes the people who sit in the boardroom. So we like to bring different cohorts of people who can give us different insights into what's happening in the company. So I often call youngsters and people who are driving innovation or who have just created a new product or just implemented a completely out of the box new idea and have created massive value for the company. So bring them to the board. Let's hear them. You yourself should rotate out. You cannot sit on a board for more than 2 terms, for sure. And therefore, I love the thought that all around there is refreshment, renewal, rotation, whether it's in auditors or internal auditors or board members, so that you are always having fresh, diverse, inclusive, equitable thoughts on the boardroom table. And finally, let every meeting be information rich. You must have not only a digital approach to actually practicing and running through the board meeting, all your collaborations, all your acting together, all your remote people coming into the meeting room, all of that. But more importantly, any relevant question, any relevant data must be available right there.
Sir, we just lost your voice, sir. Shailesh bhai, we just lost your voice. Sir, we can't hear you, sir. Sorry. Sir, we are not able to hear you. We are not able to hear your voice.
सर जो हेडफोन मेरे ख्याल से वो चार्जिंग खत्म हो गया मेरे ख्याल से, तो शायद
Sir, I think AirPods must be out of charge.
हाँ, तो चार्जिंग खत्म हो तो डिस्कनेक्ट करना पड़ेगा ना सर उनको उसमें से।
Yes, sir. So please speak.
Can you hear me?
Yes, sir.
Yes, sir, yes.
Go ahead. I just
think these
need my
AirPods
AirPods to be recharged. There.
Yeah.
Okay.
We are now
Go
into a
ahead.
wired one.
So go ahead with the questions if there are any, or whichever way
So
you
you
want to
also
run.
missed the last part. If you want to please close that. We last 3 minutes we couldn't hear you. 3 to 4 minutes.
Oh, I'm so sorry. So I was talking about a data-rich board meeting, which you should conduct, which is to make sure that all your interactions at the board are data-rich, all your collaboration software, context software, ESG software, all the questions, all the reports, all must come to the board in a digital form so that you can access it. And while you're in the board meeting, any item that you need data analytics on should be made available right there. Only then can you have a information-rich, satisfactory board meeting. Thank you.
Right, sir. I think, as you rightly mentioned, in the end comments, data. So, someone who can mine the precious element is always a winner. And nothing is precious than data now. So I think, you all have to be now get into mining zone.
Yeah. Very
Sir,
true.
amazing session, sir, and thank you for delivering an excellent, engrossing actually, and a very, very futuristic session. And I welcome our Vice Chairman, C.A. Vishal Doshi, sir, in this board dynamics. Thank you,
Hello.
Vishal Bhai, for joining us. Vishal Bhai, before coming to you, I would like to take some quick questions. So there are a lot of questions. So if you allow me, I'll take up some questions, sir.
Sure. Go ahead.
Yes, sir, one basic question that has come is, if you are a part of an audit committee and you are discussing internal audit report, do you think it is a good practice to have internal auditors also in that report, or should you discuss without internal auditors?
Of course, with the internal auditors. I believe in full transparency. I like people to interact with each other. There's no hiding anything from anybody. This whole idea that you should have silos and people should not hear what somebody else is saying is obsolete completely. Got to have full transparency. Kisse kya chupana hai? Kuch nahi chupana. We are all there to create better value, create better protection. Just no point in keeping anybody outside. I never have this idea of keeping people outside, sitting outside waiting for me to call them. All this rubbish I never do.
Right, sir. So somewhere I think, as internal auditors, I think most of the times we are at the receiving end, because our reports that we want to share or that we want to, the flavor that we want to give, usually we don't get a chance, especially in front of audit committee. So I think as a chartered accountant or as a firm, as you rightly mentioned, we should somehow ensure that, if in audit committee we are discussing internal audit reports, we should be present there. And
of course, no question. No question.
Right.
And it all depends also on the audit committee chairperson.
Yeah.
You know, if he or she wants to encourage transparency and internal audit refreshment and betterment, then there are many ways to do it.
Right. So Manoj Chomal has asked the question, for mutual funds, SEBI has allowed appointment of a dedicated resource for trustees to help them monitor conduct of AMC. Do we see this being extended to other asset managers, and how important is this move made by SEBI? I mean, do
It's
you
a
read
very
anything?
important. So this morning I was listening to Mr. Tyagi. There was a conversation between him and Mr. Damodaran, and this exact question was raised to him. And this stems from the fact that the
Sir. So we can hear you without AirPods also for some time if you can speak. So not yet. So you'll have to disconnect the AirPods, I think. Perfect, sir.
Now you can hear me. So what Mr. Tyagi was saying is that this has been done to empower the trustees of mutual funds to actually get to the knowledge of what is happening in terms of the decision making in the mutual fund. Because if that is not enabled and they do not have this resource, then they are somewhat hamstrung by whatever the AMC pushes in their direction. So that's the logic of making this officer available, which Mr. Tyagi mentioned this morning in the conversation with Mr. Damodaran. My own view is that as chairman of L&T Mutual Fund, for example, I like to have my meetings concurrently with the AMC. So I get a chance to hear from all the board members of the AMC and the entire top CEO deck. So I call all of them and they're all sitting there so that we can get a good sense as trustees as to what decisions have been made on behalf of investors, what risks have been taken, how are they documented. So we run a very transparent process. And so for us, it will be a question of if I need somebody to ask a specific question, now I will have access to a particular resource. But I always had it because that's the way we structured it.
And sir, if in that case you have to lodge a protest in terms of one of the practices is not correct, would you be empowered to do so? Because it's an extended board, it's not where you are a board member.
No. I think, you see, the problem with all of us is that we need to get focused on the end object. What is our end object? End object is transparency, end object is disclosure, end object is making sure that what you have done becomes transparently known. The regulator wants to make sure that investor is protected. It's our interest is the same. We also want to protect. So if you do anything which is in line with the overall objective of your being the first level regulator. So the idea is that if you are a subset of SEBI as a trustee board, then you need some officer who can help you to fulfill your duties. That was the whole idea.
Okay. Right, sir. Quite an insight, actually. Now, Rajneesh Desai has asked a question. The ESG focus that you mentioned, I mean, that's a very, and I mean, most of them have appreciated that. So, but in situations where ESG goals and profitability are at loggerheads, what decision would you suggest as a board member, independent, and how also do boards take such a holistic view, keeping the interest of the planet? I mean,
Absolutely.
are they really that far-sighted?
Yeah. There's no question about it. And I think if you're, there's not any idea of farsightedness which drives it. It is a idea of necessity which should drive it. You won't have a planet to live on if you're not cognizant of what's going on. And if you don't give it, you won't be able to live. Try and go and have a board meeting and go one day, and you'll realize why it is important for all boards to be climate conscious and ESG conscious. And try and get money from any foreign entity without being in compliance with ESG, and you'll know why that is necessary. They won't give you money. It's just not going to be available. That's it. And pension funds and others will sell your shares and go if you're not ESG compliant. So choice is yours. And this is going to come to the Indian financial institutions as well. You'll not get money from an Indian financial institution if you're not ESG compliant. So that's it. If you have your equity, then you can ignore the planet. But then you will pay for it because the social license that you have, we don't realize that we have an implicit social license to exist and operate where we are operating. That will be withdrawn. So you will see that. And therefore, this is no longer theory. This is today's fact and tomorrow's absolute necessary attention that all of us must pay to. That is the biggest message I would like to leave behind for this entire conclave. Don't take this as nice to.
Brilliant, sir. So Jitendra Surana, sir, can you hear us? So put one inside.
Can you hear me now?
Perfect, sir. Absolutely.
Yeah. Okay.
Right. So Jitendra Surana has asked a question. What if independent director shows he was vigilant and still fraud happened in such a big financial institution?
Okay. Go ahead. Last. I think we are running out of battery, so you'll have to ask me the last question.
So you can keep that aside. We'll do it without that. So I think.
No, but I can't hear you. If I don't have my air, I can't hear you. That's the problem.
Okay.
You can hear me, but I can't hear you.
All right.
Go ahead.
So one typical that we get a question as to, we have been vigilant, the independent directors have been vigilant, but then if there's a fraud that has been occurred and has been proven, what should be our recourse? And usually these are related party transactions, which are huge in numbers and used for hiding problems from board.
So you should get external legal help, which the company is obligated to pay for under Schedule 4, under Section 149, Schedule 4. And you should also make sure that you document everything that you're doing very carefully. So that documentation is very, very crucial.
Right. So Bimal Bhatt has some string of questions. So he's asked, how can independent director justify his role in 5 or more listed companies? Is it advisable to keep committee meetings and board meetings on the same day in the limited time frame? How can there be good contributions by the independent director then? And should company expect minimum number of hours and days in a year to be spent by an independent director?
So let me go in reverse direction. I think independent directors should spend as much time as is required to perform good governance role, no question about it. And to keep committee meetings in a convenient schedule is a good practice. It helps board members, it saves time, it's more efficient, and the connectivity can happen. So I don't find any difficulty in doing this. The total number of boards that you sit on will depend on what other work you are doing. So if, for example, you are a dedicated independent board member and in an advisory capacity, then to go beyond 5 boards is no sweat. As you all have read out, I sit on far more than 5 boards because I'm not operationally involved in any of the businesses. My role is now purely a governance role, so it doesn't matter. But otherwise, you got to be very conscious that you are spending the right amount of time. I know all the companies that I sit on the board of rather well in terms of business, environment, etc.
So I think till the time you are justifying the role, I think the number of companies really don't matter. It is our conscious call whether are we delivering it on the right.
Absolutely, absolutely. And you will come to know from your next evaluation at the end of the year.
So that brings us to another question. Should the independent director be involved in evaluation of KMPs, be it the CFOs and be it the other CEOs or something like
Absolutely. It is now mandated. It is now mandatory. And
so
the whole... No, absolutely. This is now common practice. In my NOMREN committees, I get a complete KRA and analytics of performance. What is the bonus? What is the way in which the bonus should be given? What percentage? It is varied from person to person. Variable pay depends purely on performance, which we evaluate. And we are free to call in people, ask them questions, call in the HR head, do all of this. So this is an actual live practice.
Well, so friends, if it is not happening, please promote that, and you can give example that it is happening at the best of the places. So let's do that as well in your companies.
Absolutely.
So
Absolutely.
one very question, sir, Vinay Sethi has asked, and this is something that most of us who are independent directors or directors face. So we are peers in a board, we are peers, but if some director brings in a financial proposal, which is not good as per our standards, and we know who are the people involved or who are the people behind it, how to deal with it, and knowing that we are peers, knowing that we have to work together in future, so that conflict still to lodge
very good question. Very good question. I think you should. It's the culture of the board which counts. It's the leadership of the board. If the chairman of the board is a person who wants fairness and equality, that's why I talked about diversity, equity, and inclusiveness. And that becomes the role of the chairman. So respectfully, you can raise your dissent. And then it goes deeply into questioning, all the facts will come out. Why should a director bring in a proposal? First of all, that itself should not be permitted on a board. I have never taken a proposal to a board. It doesn't make any sense at all. Never. In 35 years on sitting on boards, I've never taken a proposal that, oh, this is something that I would like you to consider. I never do it. And if I do it, I don't think it is completely wrong. So I'm obligated. So if there's a great opportunity, then I would like to bring it to my company. But then I would get out from discussion. I would recuse myself and let the rest of the board discuss it so that there is complete objectivity to the final decision. That happens. So the person who brings a proposal should be asked to go out of the room when the board is discussing it.
Can you really do that?
Of course, we always do it. There's no question.
Without hurting the ego or the self-esteem of a director?
Not at all. Not at all. It's respectful for his own protection or her own protection.
Right. Fantastic, sir. Fantastic and amazing. And as you said, batteries are dying. We are now slaves of somehow these batteries. So we'll have to then, of course, terminate this session, sir. And really helpful. Sir, please don't quit now. Sir, can you hear us? Shalbhai, futuristic world that we all are in, and I think wired world. Very soon we'll all be about these.
We'll have to keep ourselves charged and also the batteries charged.
In fact, so much so I have also taken up electric car now. So everything is charged.
Yeah, now I can hear you. Tell me.
Yes, sir.
Tell
So
me.
we're just talking about the entire world, the electric cars and all of this which is coming in. So I think everything would be subject to charging, including us.
Yes. So we
Right.
better get used to the discipline of having longer charges or remote charges. Now what we'll have to start figuring out is how do you charge remotely? But the most
Brilliant.
important thing,
That's a very good
वो
subject that you. I think we should do something on
वो
that as
होगा
well.
होगा कोई टेक्नोलॉजी आएगी अभी जल्दी से जैसे हम सुन रहे हैं वैसे चार्ज हो रहा है.
Really, and today, sir, it has been a charged session, and it really has, must have really charged each and every. So all the inquisitiveness, all the curiosity, and every good practice that we could do. Plus, how can we be an effective independent director by maybe learning from Shailesh bhai and Mukund bhai himself? I think that is something that we could really start looking into it, and maybe re-attend this session for a revision. I think one of the sessions that will go down in a very fantastic manner would be referred again and again on YouTube and other channels as well. Thank you, sir, for creating this. I invite my vice chairman, Vishal bhai from Baroda, to please give a well-deserved and a hearty vote of thanks for this session. Over to you,
Sure.
Vishal bhai.
From my hometown, Vishal bhai.
Yes.
Yes, sir. Thank you, Arpit. Good evening, friends. It is a privilege to propose a vote of thanks to a stalwart like CA Shailesh Haribhakti, sir. Sir, it is always a pleasure listening to you, and you have dealt with the topic of future-ready independent directors enabling ESG and other initiatives straight from your heart. As independent director on the board of so many companies, you are able to share your decades of experience on ESG responsibilities as independent directors. So you made it very clear that the position of independent director is no longer or is not a ceremonial position now. It is a position of being a trustee of all the stakeholders and hence carries a lot of responsibilities. The role includes improving corporate credibility and governance standards, and more so in these challenging times. So on behalf of WRC, I thank you for sparing your valuable time and sharing your experience and knowledge with all of us in a very lucid manner. I would request all the participants to kindly join me in giving a round of applause to Shailesh Haribhakti, sir.
Thank you. Thank you.
So passionate and
All the best.
so interesting, sir. Amazing session. And
Thank you.
just to pass on, Suresh Prabhu sir gave regards to VB sir. You were just remembering him during his address. So, and
I will definitely I will do that. Thank you so much. Thank you.
Sir, seek blessings from him for us also on this new occasion, new year.
Thank you. Thank you. Thank you. Thank you very much. Thank you.
Thank you. Thank you, sir. Thanks a lot.
Thank you, Vishal bhai.
evening.
Thank
Good
you for wonderful joining us. Thank you, Vishal bhai. Thank you, all the participants. This was day one of Boardroom Dynamics. We have yet another day to come. Look forward to interact with all of you. Be there and let's learn a little more on this Boardroom Dynamics. Thank you for joining. For now, see you. Mishra ji, thank you. Record the session and stop the recording, please. Vishal bhai, take care.
Yeah, chalo, bye bye. See you.
Good night.